Good afternoon, everyone. It's a pleasure to be here. My name is Michael Reese, and I'm the founder and co-president of Blue Owl, as you just heard. And we run a $300 billion public alternative asset manager. We're headquartered in New York, and we have four main strategies. The first is direct lending. The second is a leading triple net lease real estate business. The third you may have seen is our digital infrastructure business, where we are financing two of the largest data center projects in the world, one for Oracle and one for Meta. And then the business that I founded, which is the GP Stakes business. And we'll talk a little bit about it. Today, I want to talk about how private capital is taking over the public markets. You don't have to look too far. There's data that supports it everywhere. There is, as the private markets have grown pretty dramatically, at a double-digit growth rate, they've sort of taken a large portion of investor portfolios. And it's all been at a time when investing in public markets has been quite challenging. You can see the number of public companies has gone down from 8,000 to 4,000 in the United States over the last 20 years. It makes it extremely difficult to find new opportunities. The number of IPOs that happens annually is down 66% since the 90s. So it's becoming increasingly difficult to invest in the public markets. And the real question is, where can investors find alpha? We think you can find it best certainly in the private markets, and we'll talk a little bit more about that today. Again, you are also seeing tremendous concentration of return in the Mag 7. The public markets in the US have generally returned about 20% a year for the last 3 years. And of that, 65% was driven by the Mag 7. This year, it's even more dire. The 16-ish% return that we've seen in the S&P so far is actually really being driven by two companies, NVIDIA and Alphabet. So when you really think about what the public markets are offering from an alpha perspective, you really have the Mag 2, and you have 498 other companies that are really hard to generate alpha out of. So what does that mean? Where does it show opportunity in the private markets for you? I thought when I was asked to do this TED Talk kind of thing, how to get a decent amount of information across in a very short amount of time, I thought, you know what? I'm going to ask the people who have given TED Talks before. They said there's two things that make a TED Talk interesting. One is obviously a timely topic that people want to hear about. That makes sense. And number two is that you wear good sneakers. So when you look at it, the top 10 TED Talks of all time delivered by males, 9 of the 10 had people wearing some pretty cool sneakers. So I figured, hey, if there's one thing I can at least get right, I can get the sneaker part right. So what I wanted to do is use my favorite TED Talk as an illustration of what we think we see happening in private markets. My favorite TED Talk is 10 years old. It was delivered by a gentleman named Mark Ronson. I don't know if you've heard of him, but he's a music producer. He produced and won tremendous awards for his work with Amy Winehouse, with Bruno Mars, etc. And he gave a tremendous TED Talk about the history of music and how what happened from the early 80s through today was that good artists just built little by little on top of their predecessors. He talked about a song called La Di Da that was written and performed by Slick Rick and Dougie Fresh. I bet you never thought you'd come to Abu Dhabi Finance Week and hear about Slick Rick and Dougie Fresh, but you probably have heard the lyrics La Di Da Di, and then followed by anybody gets a free drink if you can tell me what the next line in the song is. La Di Da Di. We like to party. All right. So that song has been sampled and overlaid on 550 other songs since 1982, when it was written and first performed. And people just try to make it slightly better. I think Mark Ronson's quote is, take something you love and build around it. And I think that's what the private market's done. When you look at one of the most iconic flagship private markets deals ever done, it happened at about the same time as the Dougie Fresh song, 1984. And it was a deal done by Westray Partners. It was called Gibson Greetings. And the value creation story in this deal was extremely simple. They used a little bit of leverage and they cut costs. And that's all private equity, private markets were for the longest period of time. And then as we have continued to evolve and create a much more intricate private capital market system, you've seen different companies iterate and add more and more to their value creation story, more and more to their business model, and begin and continue to drive alpha, which you can't get, as I said earlier, as part of the public market. So you take that Westray deal, lever it, and cut costs, and you look at what our private market partners are doing today. Just today alone, our GP Stakes business, which has an underlying $2.2 trillion of managed assets, that's one out of every $6 is managed by a firm that we, Blue Owl, own a stake in. You heard from a lot of them today. You heard Robert Smith this morning, Sadek Waba of I Squared. Lawrence Golub was just on the prior panel. And what these businesses are right now is tremendous alpha generators. They're able to take their unique position, and it's not just about leverage and cutting costs. It's about driving a whole host of modern day value creation activities. You see that coming in the form of AI adoption, Salesforce optimization. You see it in the form of some new financial creative strategies, like certainly like the use of capital call facilities early in a fund's life. You add to that continuation vehicles on the back end of a deal, and what you're able to get for clients is a very balanced exposure over time. If you believe this math, if you were able to stay invested in a private company for 10 years, you would get the same multiple of money from a 13% IRR deal as you would a 25% IRR fund if you had to invest over a 5-year period with a 5-year harvest model. So the goal and what we see moving towards is the breakdown of the 5-year investment, 5-year harvest model, where private markets will become a consistent and mainstay allocation across investors' portfolio. It's where you can find alpha, it's where you can get deployed, and it's where I think over time we're going to see more global investors shift their capital. You've read about all of the allocation increases from the wealth channel, from the insurance channel. I think one of the most interesting products launched this year was our partner Silver Lake, that launched a institutional evergreen fund. So institutional clients coming in, they're allocated day one, and they get a full portfolio exposure. That's what I alluded to. You only need a 13% IRR to make an equivalent total multiple return as you would with a 25% overall IRR fund. Boy, 8 minutes goes pretty quickly. I do just want to summarize. I do think this model of take a private company, value create through it, and overall over time, you're going to be able to generate public market returns or in excess of public market returns by staying invested is what we're likely to see as we move forward. Hope you all have a great afternoon. Thank you very much for your time.